Okay folks, it's gone time. Good morning and welcome to the 6th meeting in 2013 of the Finance Committee of the Scottish Parliament. And I could just remind everyone present if they could please turn off their mobile phones, tablets, electronic devices, etc. Our first item of business this morning is to decide whether to take item 3 in private. Are members agreed? Members have indicated their agreement. Our second item of business is to take oral evidence as part of our Stage 1 scrutiny of the LBTT Bill. Can I therefore welcome to the meeting Alan Cook of Pinsent Masons, pleased to meet you Mr Cook, Elspeth Orcharton, ICAS, good morning, and Nick Scott of Brodies, good morning to you too. Now then, usually we have an opening statement, but given that you've given us detailed submissions, we're going to go straight into questions this morning. And time-honoured fashion, I will start with some questions and then I will open up the session to colleagues around the table. So I wonder if I can start with yourself, Elspeth, with regard to your own paper. And I'll be asking colleagues if they wish to contribute when I ask a question once I've spoken to yourself and so on and so forth. Just the first thing I was going to raise was with regard to paragraph 5, where you say, and I quote, "The lack of clarity on even provisional figures of tax rates or bands goes against the principle of certainty in taxes, particularly resulting in a phase of investment decision blight in the run-up to the introduction of the tax in 2015. Is there any evidence that this is actually taking place?
I think we look at the behavioural response to rate changes in taxes across all taxes in the UK. I'm sure the HMRC would be able to provide that evidence. So, for example, when income tax rates change, there would be an acceleration of income into a lower tax period and a deferral of income out of a higher tax rate period. The discussion about bonuses in the city and the top rate of income tax is evidence of the behavioural impact. It seems to me that, whereas we haven't undertaken any particular survey or there's no report I can point you at, if I were to consider moving house, and I don't think I'm untypical, next year, it would be nice to know if the rate of tax I was going to have to fund was going to be 3, 4, 5, 6, 7, 8 or 10%. And that might stifle the decision.
Yes, Mr. Scott, you've made raised similar concerns in terms of your own submission. You said that uncertainty may discourage investment in the Scottish market, but we've also received evidence which says exactly the opposite, in actual fact, that if a rate is set this early, that may discourage any activity now. So, for example, if tax levels were to be reduced following April 2015, people will say, well, we'll just delay investment decisions just now. So clearly there's an issue which has been presented to us by evidence that in fact not giving the details of the tax rates before April 2015 is actually a very positive thing.
It differs in residential and commercial, I think, to a degree. Residential, often the decisions to move house are dictated by personal drivers for the individual. So, you know, you've had a new child, you've retired, your job has changed. Commercial property, though, and our practice and our client base spread all of that spectrum. Commercial property industry, often drivers are driven by returns you get on the property that you invest in. And if you don't, one of the functions of that is the cost it costs you to acquire that property. So if you're buying a property today and you may have an LBTT or an SDLT rate which you know about, but if you're told that that is going to change, then the cost of acquiring that property will change, and therefore the returns that people are going to get from buying that property will change. And what people need in those circumstances is certainty of the return that they're going to get on their money. So I can certainly speak for the range of the clients that we talk to, and those clients are based both in the Scottish market, but they're also overseas or throughout the rest of the UK. And certainly the feedback we had from them is that they are concerned that there's an uncertainty, that they do not know, both if they're committing today to purchase or make investment decisions which will take effect when these new rules would be in place, they don't know what the cost will be to them of making that investment, and therefore what the net return they will make on that investment. But also, even if they're acquiring properties today, they may well sell those properties post these rules coming in, and they don't know what the purchasers will have to pay in terms of cost of acquiring those properties, and that will affect the return that they make.
So Cook.
I would agree with Nick's comments. It's worth also bearing in mind the way that the transitional arrangements are working for the introduction of LBTT compared to the way that transitional arrangements would typically work when the likes of SDLT rates change. When SDLT rates change, it potentially is at the drop of a hat on budget day, if the UK government decides to do that. But typically, there's a carve-out from the effect of the rate change, which says that any contracts which had already been in place before the rate change was announced will be subject to the old rates. So it gives certainty to people who have already entered into commitments and contracts that they know that the rates that they had expected will be the ones that will continue to apply to them. With the introduction of LBTT, LBTT is to apply to any contract which is completed or substantially performed after the introduction of the tax in April 2015, whether or not that was a pre-existing contract. So people are going to be entering into commitments in the lead up to 2015. Some of them have already been entered into, which will take effect after April 2015, and they still don't know and won't know what the tax rate will be which will apply to the transaction which they have committed to. And I think it would be wrong to assume or to rely upon a notion that people will happily just sit back and wait to see what the rates are, because investment opportunities for commercial investors and developers arise. They have to take the opportunity when they arise. They can't just sit for a year or two waiting to see whether or not the tax rate is something which is acceptable for their project appraisal before they decide to commit. So they're needing to commit now, and if tax rates are uncertain, then it is an extra element of uncertainty which is not going to help investment decisions.
The Scottish Government's made it clear that they expect this tax to be revenue neutral, so there's not going to be any massive increase in taxes. Obviously there might be changes in terms of rates affecting different, but it's not going to be. There's nothing, no great leap into the unknown in terms of that regard, is there? The aspiration is for it to be revenue neutral overall, but that means there are going to be some winners and some losers. So, for example, if speculation on my part as to the precise nature of the policy which will underpin the rates which are finally hit. But, for example, if a decision is made to favour the residential market and to assist the lower ends of the residential property market, then to achieve revenue neutrality, you have to make up the difference somewhere else, and it's entirely conceivable that that difference would be being made up out of the higher end and commercial transactions. So investors and developers will be looking at that, anticipating that that's something which might happen, and therefore anticipating that they could end up with a higher tax rate than the current SDLT position would give them. Okay, and back to the ICAS paper, which I opened with. In paragraph 10, it says that there should be a minimum of rate differences, release or exemptions limiting the opportunity for tax avoidance. But then in paragraph 16, you say the removal of subsale relief from the provisions is not welcome. And previously in paragraph 5, you'd mentioned that we need to maintain Scotland's reputation as the most attractive part of the UK in which to do business. So I just wonder if you can kind of clarify this. I mean, if you're wanting to reduce the number of reliefs, will that reduce Scotland's attractiveness? But at the same time, you obviously wish to ensure sale relief is included.
If we go to the comment made about, which was addressing the simplicity and removing the opportunity for tax avoidance. Tax avoidance arises where you have more and more and more reliefs and exemptions, some of which may no longer have the policy need that they once had at time of introduction, but quite often tax legislation emerges and it's layer upon layer, and it's the interaction of a lot of those reliefs and exemptions that give rise to the avoidance opportunities. That is not to say that exemptions and reliefs for key areas that support policy drivers are bad things. Our view is that there are commercial uses of subsale relief that should be protected. So subsale relief in itself isn't a bad thing. It's probably one of these key areas where you do want to maintain a relief, but you need to be careful about how it's structured.
Mr. Scott or Mr. Cook wish to comment?
If I could come in. I mean, it's one of the major concerns we had about the proposed legislation. I mean, it's probably worth just explaining the effect or the perceived effect it might have. I mean, the property industry breaks itself down into really those who use property and those who are willing to invest in and develop that property. And a developer often bridges that gap between the people who have capital who wish to invest in property and those who actually use it. These developers will spend their job therefore is to identify, a building or a site where they think they might be an end user for that, to go and try and join those two dots together, get planning, make the thing financeable, and then actually build it and make sure it gets built to cost and on time and all the rest of it, and hope at the end of the process they will have made a profit. Now, that huge, that's an entrepreneurial activity, and it's also a speculative one, and often these projects do not come to pass. You'll have, these people may often run 5, 10, 15, 20 projects, of which 3 or 4 might come off, and the hope is that you make enough profit out of those 3 or 4 to bail out or make up for the fact that many of them don't happen. So it's a difficult job to do. It's a difficult job in this economic time to do as well. But the effect of removing a subsale relief would be to tax that very person, the person who is the engine and the driver of that development, which creates the built environment which we see around us. You discourage them from doing the one thing which they're there to do, which is to try and create new property for commercial businesses and others to use. And it's also worth understanding that an awful lot of these. I mean, if you look around Edinburgh, if you look around Glasgow or Dundee or Aberdeen or wherever, many of these projects, the cranes that you see around these city centres or the development sites which you see being built, the decisions and the people financing these projects are commercial organisations. Most of them are not based in Scotland, and if you are to discourage them or tax them further to do those projects in Scotland rather than an equivalent project in Manchester or Durham or Newcastle, then you have to be very careful about the message that gets created to those people who we rely on overall as an economy to act as a driver of economic regeneration. And so it's a grave concern to us that you can create, there may be a legitimate concern about avoidance, and that can be addressed by a discussion on the avoidance issue, but you don't want to create a perception that the job of developers is going to be taxed more by the Scottish Government than it would be by the English Government or other governments.
Okay, thank you. Mr. Cook, did you want to comment on that either?
Yeah, I'd entirely agree with all of those sentiments. It was a very serious concern of ours as well, as to the bill when it was published, that subsale relief was being deliberately excluded from the tax. There are it's been a feature of the tax system and the stamp taxes system for time immemorial, really. It's there to underpin what is regarded as genuine commercial activity. It's not there as a for tax avoidance reasons. It has been exploited by tax avoiders, and nobody would dispute that. And a lot of the tax avoidance which has surrounded subsale relief under SDLT is frowned upon, I would say, by the majority of tax professionals and people who are just trying to get on with life. And I think it's notable as well that the Scottish Government's policy memorandum, when it comments on the not including subsale relief, the sole justification for excluding it is that it's used for tax avoidance purposes. There's no attempt to argue that subsale relief and the economic activity that it supports, that economic activity is something which is inappropriate. And I think you're in severe danger of undermining that economic activity in the interests of trying to clamp down on tax avoidance. I think there are other ways to do it. And as we said in our written submission, there's the example of what's happening at Westminster just now in relation to SDLT, where subsale relief is being recast in a manner which hopefully will stop it from being used for tax avoidance purposes, but with an acceptance on the part of the UK government that the economic activity which subsidy relief underpins is appropriate and ought to be supported.
Thank you. Mr Scott, paragraph 14 of your submission is about proposed exemptions under the bill, and you say you note the absence of licences to occupy from the exemptions. Licences to occupy have been exempted from SDLT. I'm just wondering if you can expand on why you believe that these exemptions should be included in LBTT.
Well, it depends which type of licence you're referring to, and I think some of the concern is that there's an uncertainty as to what class of licence or category of licence would qualify. I mean, in one sense, to take an example, if you have a shopping mall or a high street where there are a variety of shops or units and they're occupied, most of those traditionally would have been occupied by way under a lease. But you know, there's no reason why the person occupying them couldn't be granted a licence to occupy those premises. That's as much, frankly, a conveyancing distinction as it is anything else. There's still an economic activity of paying a sum of money for the right to use those premises and to run a business from them. In that sense, you could see why there's a logic that there's no logical distinction for treating those differently under SDLT or under LBTT. The concern is the broadening of all categories of licence or licence of occupation of premises to the remit of LBTT, and there are certain circumstances where it would appear there's an attempt to include them within the ambit of LBTT. You know, the granting of running a musical venue for a night, taking on some premises to do that for a gig or whatever. Is it really appropriate that that's the subject of LBTT when it's clearly not the subject of SDLT? There's examples like that. Another one, example relevant very much to this city, hotels and how they are operated and managed. Historically, they might have been leased, in which case SDLT would have been paid on them. Those hotels are very often now operated under management contracts, which is effectively a license to occupy the hotel and run it. We need to, there's a concern there that, operating and managing that hotel in other parts of the UK would not be taxed under SDLT, but we would be setting up a situation where in the Scottish economy the running of that hotel would be taxed as LBTT. A decision needs to be made whether or not that's an appropriate thing to do. It's certainly a concern if it puts another blocker to economic development of further hotel opportunities in the Scottish market.
Okay. Pinsent Mason's response said the committee should make sure it has fully appraised itself of the potential implications for this expansion of the scope of LBTT over SDLT, and you mentioned a number of exemptions, Mr Cook.
I think there's grave danger that we could fall foul of the law of unintended consequences by having a blanket inclusion of licences within the scope of LBTT. In the submission, tried to think of a couple of examples. For example, group company occupation, where it's a typical feature of a commercial lease that's granted to a company, which says that companies within the same group as the tenant company are allowed to occupy the premises, and that that obviously companies are with a series of subsidiary companies for different elements of their business may find that they've reorganised the business and that the nature of the business from that premises needs to be undertaken by a different company within the group. The lease will say that that's permitted, provided it's a licence arrangement and not a lease arrangement. So suddenly, every time any time that happens, the group company would be subject to LBTT. Now, you would say that they can claim group relief, that's fine, but suddenly there's a whole new compliance burden on businesses as a result of that. I was trying to think of other examples which potentially it could bite. And you might think that some of these are or are not some things that you want to tax, but I think you've got to be aware of the fact that they will potentially become subject to it. So, for example, telecoms masts. Typically, a telecoms operator will install a mast somewhere, that may well be a lease. That's fine, but it's very common for there to be site sharing arrangements between different telecoms operators, where other operators will be allowed to put equipment on the mast. It's a license type arrangement, the potential is there for these arrangements now to be subject to LBTT depending upon values. The entitlement of a railway operator, a train operating company, to use railway infrastructure that's owned by Network Rail, is that possible that could become subject to LBTT now? Building contracts where a contractor is given is engaged to build a building on premises that somebody else owns. Well, what is the basis upon which they occupy the land in order to do the development work? Will they have a licence granted to them? Forward funding arrangements, I think there's been some discussion previous sessions with the committee on that, and part of the arrangement involving forward funding arrangements is that a licence is granted to the developer in order to build the building on land which an investor has purchased. And it's a licence again. These are all examples, I think, of where there's the potential for LBTT to be kicking in commercial arrangements where it's not currently the case. You're increasing the tax burden in a whole variety of different cases. You're increasing the compliance burden on businesses, and as I say, it may or may not be the case that the intention is for these sorts of arrangements and 101 others to be subject to LBTT, but I think it's probably impossible for us to try and guess what they all might be. But I think you have to be aware that there will be unintended consequences from the arrangement.
Okay. Do you wish to comment? Or?
I don't think there's anything to add to those answers.
That's fine. I have to comment on every question, otherwise we'll probably hear all morning. But back to yourself, Mr. Scott, in terms of paragraph 21 of your submission. I have to say all the submissions are really excellent, actually. They're very, very detailed. We would suggest that Scottish Limited Partnerships should be treated as bodies corporate for the purposes of LBTT group relief, so that the assets can be transferred between sister companies owned by an SLP without an LBTT charge. This is not the case for LSDLT. What would be the impact on the revenue of this, revenue to the Scottish Government of this change?
I couldn't comment on the tax that's been raised by this or not. It's more driven by, from our perspective, a perception that there's an arbitrary distinction here drawn, which doesn't appear to us to have any policy driver behind it. The decision whether or not to structure yourself as an SLP rather than just through a normal corporate vehicle or anything else will be driven just by the particular reasons of a business or a family or anyone else to organise their affairs. It doesn't seem to us there's any policy decision why, if that umbrella entity owns various subsidiary companies that transfers of properties between them, should be treated any differently where the parent is a corporate, or a company or an SLP. So that was the driver for our submission.
Mr. Cook, you comment on paragraph 47 of the bill in your submission, basically, and you say, and I quote, if transfers in the shares of companies which hold or invest residential property in Scotland attract LBTT rather than 0.5% stamp duty, this is surely going to inhibit companies from investing in residential property within Scotland. Why would that be the case?
Over the last few years, both pre and post crash, there's been UK-wide a policy, much policy thought given as to making sure that there's enough housing stock within the UK. That's taken a huge knock over the last 5 years, and it's therefore very important that we allow every opportunity for residential development and the development of housing stock to take place. One of the directions which has been identified, dating right back to studies before the crash, one of the ways which was identified to encourage that was to encourage the development of professional and institutional investment into residential property. And that is something which has been slowly developing over the last few years as significant institutional investors in residential property have been building themselves up and developing. And the idea is that you're therefore creating housing stock which is available for let, rather than people having to buy their own home. These investors are large companies which are owning a lot of residential property. At the moment, when the shares in those companies are traded, that's subject to stamp duty at 0.5%, and that's the position which would apply in respect of any transaction in the UK. If it's the case that LBTT charges those types of share transfers at a higher rate, then it's going to discourage these sorts of investors from investing in property in Scotland, and that's the nature of the concern. At the UK level, in relation to SDLT, again, I don't want you to think that I'm simply saying you should copy SDLT every time, but I think it's always instructive to see what's going on in other jurisdictions and other tax regimes. And in relation to SDLT, there has been quite a lot of focus on that over the last year or two. A lot of heat was generated about people avoiding SDLT in Chelsea and Westminster by buying mansions using corporate vehicles. And measures have been introduced to combat that. There are going to be measures in the Finance Act 2013, the UK Finance Act 2013, in relation to this, and there's been a lot of consultation with stakeholders over the last few months as to how to make it work. And the draft Finance Bill 2013 provisions, which the Treasury has produced, include a raft of exemptions from the charge which would apply to residential property held in corporate wrappers, such as businesses which are investing in or developing residential property, farmhouses, and other types of business-related activity. And I think if there's going to be a charge under LBTT of that nature, then I think serious consideration should be given to similar sorts of exemptions being applied to it in order not to discourage, I think, the very important development of a professional and institutional residential investment market in Scotland.
See, each of you have said that that you want to ensure that the rates taxation is kept quite low, so that we don't have a disincentive to invest relative to the rest of the UK. But each of you at the same time has called for exemptions and reliefs, which clearly, if implemented, would reduce the revenue. And if the revenue the Scottish Government is going to receive from this is to be broadly neutral, surely that means the rate's got to go up, the overall rate has to go up if you've got all these exemptions, which mean that, because no one's quantified incidentally in any of the papers what an exemption what the impact of an exemption would actually be. So surely that's a kind of contradiction in terms, if you're having, the more exemptions you have, the more the people who don't get the exemptions then have to pay in order if we're going to have a revenue neutral tax.
I think a lot of the things that we've been talking about are not about looking for exemptions over and above what people are currently used to. I'm sure there are examples of that, but the sorts of things we've been talking about are cases where it's actually proposed to expand the scope of LBTT beyond that of SDLT, taxing licences, taxing subsales, taxing corporate wrapper arrangements, and what we're talking about, therefore, is trying to mitigate the effect of the expansion of the envelope of the tax, rather than trying to improve the lot of the taxpayer as against what they currently have under SDLT.
I understand that. Surely that'll still mean the overall rate would have to go up if these exemptions were implemented.
Well,
I think what we're trying to say is, at the moment, these provisions, or the particular ones we've all commented on, are in the legislation, so they're in the revenue figure at the moment. So to carry them forward, almost by definition, is the revenue neutral position. If you withdraw the exemptions or reliefs, you would be increasing your revenue take.
Reduce the rate overall,
Which may give you that opportunity. What we're trying to do is inform that decision as to the policy choices. It will only increase the revenue if the activity follows, and I think it's the activity consequences we're getting to.
Yes. I'll just repeat that point. I mean, the rate only applies if there's actually a transaction which triggers an LBTT charge, and the concern is if you set the rules such that you discourage people from doing the transaction in the first place, then you end up with less revenue overall, and that's the concern you have. And it's also viewed not just in the context of I appreciate this is discussion about LBTT, but if you discourage, to go back to the subsale and developers and the rest of it, if you discourage a developer from building a new building, then that building will not be created, rates will not be paid, people will not be employed in that building, construction work will not be generated, and all the other taxes that flow from the economic activity of investment in residential property or commercial property or whatever it might be. So you have to view it not just in the context of LBTT, but in terms of the wider.
Indeed. It's where the balance is to be struck. Anyway, I'm going to open the session up now to colleagues around the table, and first to ask questions will be Deputy Convener John, to be followed by Jamie.
Thanks, Convener. I mean, I think some of my points would be building on issues that the Convener has raised already. And I mean, if maybe I could just start on that one, what Mr Scott, you just said just now, this whole theme of we don't want to discourage development, and if we put tax up, that will discourage development. But I mean, in the first place, how do Scottish land prices or building prices compare to English ones? I mean, I assume they're lower than London, but are they comparable with other places?
And it depends on demand and supply, and some parts of some Scottish cities will be more expensive or more valuable than some parts of an equivalent English city. But development is less about the absolute cost than it is a return on the capital which you invest in doing that, and therefore, in one sense, it doesn't matter whether or not you're developing a property in central London where residential values are far higher than they are in Edinburgh. It's about how much money do you put in, how long is that money tied up in that project before you crystallise your profit, and what is the profit that's going to be generated by carrying out that development.
And the tax part of that is very small, relatively speaking.
It depends. It depends who you are and which part of that process you are. The point I was making earlier is about very often the person who there's there's groups, the people who use property, who don't generally want to invest their capital in it. They just want, trading businesses who just want to run a business from a shed or an office or whatever it might be, and the category of investors, pension funds and others who've got money to invest in that property. And these developers, who are the guys who are the engine of it in the middle, their job is to sit and try and marry those two people together and drive it. And actually, they're taxing them to LBTT on the land value of that transaction is quite a material part of their profit that they may generate.
As a result of that, not that just they pay. I mean, if you've got £1 million to spend and that makes sense, and the tax is 50,000. Now, if we make the tax 60,000, does that not just mean that you spend 10,000 less on the actual building to compensate?
You might, but that depends on a negotiation of whether or not you can have that negotiation with the landowner, or with your building contractor and the rest of them. I guess my point is, I mean, we employ a lot of lawyers. I have a broad range of clients, and so you talk to them and you watch their attitude and the perception it creates. I mean, I'll give you an example. I was invited to a meeting 10 days ago by a potential new client. They're based in the English regions. They've been trading for 60, 70 years. Student accommodation, hotels, the education sector generally as well are their main sources of focus. They've done quite well in the English market for the last 50, 60 years. They've identified Edinburgh as being a place which is many of the similar potential users of property and the rest of it. So they were in Scotland to meet potential lawyers, advisors, all the rest of it, and look at sites for discussion. So I was introduced to them, I had a conversation, and they said, tell us how the Scottish market will work for us relative to our experience of the English one. And so we went through, you know, the legal background and all the rest of that. And they came on to the subject of tax and how SDLT works at the moment in tax reform. And it's an interesting question, what is the message that how am I to describe what is being discussed here and what is to come out of this legislation as to how it will affect the decisions they make about whether or not they bother to come to the Scottish market, whether they just carry on pushing the furrow they've done quite successfully in the English regions.
For an example like that, if it's students in Edinburgh, I mean, they can't go to Newcastle and build a building in Newcastle.
But they could choose to spend the next. I mean, these projects can take years of their time and effort speculatively to bear a profit. There are also students in Newcastle and students in Manchester and Birmingham and everywhere else. And so if you're looking at two otherwise ostensibly identical propositions, but in a jurisdiction where you'll be taxed more for doing it than one where you wouldn't be, then inherently you're going to encourage that person to spend his time where the net return for him in doing that exercise, which may have many beneficial purposes for everyone. I'm not here to defend developers making lots of money just as an absolute thing, but the point is that creates accommodation which students can go into, it creates construction activity and all the rest of it.
All of which I agree with, but as if I was his accountant, I'd be saying, right, the tax is higher in Scotland, so you just offer a percentage less on your price than what you would pay in Newcastle. So I still don't understand that it would actually affect the commercial decision.
Some of that, as I said to you, is about negotiation. You have to ultimately have a vendor who's willing to sell a site to you for you to be able to develop it. So that some of that is about negotiation. But genuinely, this is about perception. That is the feedback we get when you talk to clients. It's about how they perceive the government's attitude to what they do. Is there?
I mean, another one just slightly related to that is hotels you mentioned earlier. Now, I mean, hotels, as I understand it, are quite international. And, I mean, the comparison that's been made in most of these papers, I think, is with England so far. But, I mean, what about Holland? Or what about Denmark? Or what about anywhere? I mean, if it's Hilton or any of these, I mean, presumably these companies are used to dealing with umpteen tax regimes around the world. And the fact that, Scotland and England are different, well, every European country presumably is different.
Yes, but yes, we all compete for that international capital in terms of our attractiveness, and all our evidence has been is to point out that you're creating the potential to create a situation where Scotland costs more to set up these businesses and invest in these premises than it would do in other parts of the UK.
In Europe, how does it compare? Do we know?
I can't comment specifically on. There'll be different regimes in each of these countries.
Yes. I mean, does anyone know, is the UK losing out or winning at the moment because of tax regimes around Europe?
There are tables produced of relative competitiveness of the UK compared to the rest of Europe. The difficulty is that they're probably at very high levels, so they will distinguish between the OECD, I think, produces most of them, taxes on say, profits, taxes on employment, taxes on capital and wealth. And there are so many different structures of tax systems across Europe and beyond that, that it's very difficult just to have one measure of competitiveness. But there are ways of doing that, and for particular tax, I'm sure something might be available, and I'll see if there's anything I can find.
I'd be interested to see just the kind of wider picture as well as...
There are differential property rates or equivalents of stamp taxes across Europe, but off the top of my head, I'm afraid I couldn't recount them.
Thanks so much.
Can I just say, it's worth making it in a positive sense, and I don't want to just complain about particular proposals of the bill. I mean, there's an opportunity as well, of course, through an LBT thing, to encourage particular types of development that the government wishes to see have done. There was an example, it's a UK-wide, and it's an income tax relief, but business property renovation allowances, BPRA schemes, which encourage the regeneration of kind of tired secondary buildings within identified areas which are disadvantaged. And we've certainly seen it. We've got experience of it in the city centres of Scotland which qualify, where creating that relief and targeting its specific sources of activity has encouraged people who would otherwise not have spent their time pursuing these particular economic activities to spend their time doing that. And you see these projects, and hotels are one example of how those things, it encourages the financing and construction of these things.
I mean, you've actually taken me on to something I was going to ask the next panel we've got, but I'll try you folk with it just now. I mean, this idea of relief I mean, with the example given is to try and help energy efficiency, I think, as well, but the examples you give are relevant too. Do you think it's better to give tax relief or to just charge everyone the same tax, which keeps it simple, and then give separate grants for that kind of purpose?
The experience we have, and that is an absolute example we have, of tax reliefs do encourage people to spend their time analysing and trying to make these projects work.
You do it better than if you gave them a grant?
That's not something I can necessarily comment on, but I can give you, if it helps, I can give you clear examples of where projects.
No, I do believe the relief helps. I think my question, and I'll try it with the next panel we have as well, is the grant better than the relief, or which is it better targeted? But we'll come back to that again. Mr. Cook, can I just? I mean, your example, your main observation is about subsale relief, I think, and the example you give is somebody who buys, I think, one bit of land. This is the first page. And then maybe divvies it up and sells it on and makes a profit. Now, we've had evidence before, for example, for convenience, 3 landowners jointly want to buy a bit of land and then split it up between them, but there's no profit and there's no loss. And I can see the argument for that being one transaction, although legally it's 2 transactions or 4. But in your example, one developer buys a big bit of land, sells it on and makes a profit on it all. Is that not two separate things?
Okay, so as a starter, just for the avoidance of any doubt, there's nothing wrong with people making a profit on activity. It's absolutely it's absolutely essential. The tax is a tax on the acquisition of land interests. That's what a land transaction is. It's the acquisition of an interest in the land. In the case of these types of development structures, the interest in land isn't actually being acquired. It's slipping right through to the end purchaser. A very typical example would be land which is in a number of separate ownerships, and somebody has spotted the opportunity to bring those ownerships together to create a larger development site where something can be built on the larger site. Somebody needs to be in a position to do all the work that's needed to bring the individual owners together, to get a planning permission, to make the site viable, and then to identify somebody who will actually occupy it and also purchase it. The sort of people that will purchase that, an investor, they're not interested in doing all of those things and undertaking all of that risk activity. What they want is to buy something which is nice and clean and which will give them a rental income at the end of the process. The developer is therefore a facilitator of the development process. They're entering into contracts for the purchase of the land because that's what you need to do in order to pull the interests together. But they're not going to own the land at any point. They're going to be passing it directly on to the person who's actually going to be buying it, the ultimate investor who's going to hold the land and receive the rental income. I think that's a very typical example of where subsidy relief kicks in. And if subsidy relief isn't there, then that person would be required to pay tax at anything up to 4% or whatever the tax is.
If somebody did that almost immediately in one go, there should only be one lot of tax. If somebody bought all the land, sat on it for 10 years and then sold it, you would tax it twice.
Nobody would. That's right. Nobody would expect to be relieved of the tax in those circumstances because they have exactly as you say. They've acquired the property. They've sat on it. Whether they sit on it for a day or 10 years, they've acquired the property in its own right. They wouldn't expect under the current regime to benefit from subsidy relief.
Yeah, that's helpful. Thanks. Okay.
Jamie, to be followed by Jean.
Thank you, Convener. I've got a couple of questions arising out of the evidence thus far. The first is I'm intrigued by these tables of comparative competitiveness internationally that Ms Orcharton's referred to. I wonder if clearly you're going to provide these to us, I think is what you suggested, which we look forward to seeing. But just before we get them, I wonder if you could tell us what these are. Are these just measures of the tax levels, or do they also set out the rates of activity in each country?
Well, you're asking me to summarise what's set out in about 20 pages of OECD analysis, but they do look at country by country the rates on what is tried to be an adjusted and comparable tax base. There's two issues in tax competitiveness. One is the tax base, what is actually taxed, and the second is the rate that's applied to it. So an overall tax take might be a small rate on a large base, or a large rate on a small base. And the tables try and do that, but they will give a graphical illustration of, for example, the costs of employment, or of property occupation, which, as I think about it, is one of them. I'm not sure if it's transactions or occupation or a combined piece. And it will cover things like the mainstream corporate tax rates.
Will they tell us, if, I think examples were given in Denmark or Holland that, Hilton was the example was given, do these tax rates actually affect their decisions? Are Hilton not building in Denmark and Holland, or are they choosing to build somewhere else? I mean, the point I'm trying to get at, it's maybe an unfair question to ask, but if we are only getting a list of what the taxation levels are, it doesn't really tell us much other than what the taxation levels are. If that's the mere measure of competitiveness, surely the measure of competitiveness is what the effect of these taxation levels are, surely. After all, that's what you're all here giving us the evidence saying, how this will affect decisions made by investors.
I think yes is the short answer to that. That's right. It is data that is helpful, but it doesn't explain the full rationale of the decisions being made. There are probably others better qualified than me to comment on what is and isn't attractive, or what is and isn't creating activity in the property market. And I suspect financing is actually going to be where a lot of those answers sit, or the lack of it, rather than just the tax rates. But,
I think the information will be useful, but I suspect we might need to look at some other areas to really dig into that area. Can I pick up on this issue of subsales relief? Of course.
Go on there, Jamie, sorry to interrupt you there, but you're talking about tax competitiveness here, but surely, a society has to look at its overall economic competitiveness, which looks at the workforce, the productivity of the workforce, the amount of capital invested, the educational attainment levels within a society, the infrastructure, and these things all have to be paid for by taxes. So you could have the most competitive tax structure in the world, but if it doesn't actually help fund some of these other issues, it doesn't actually necessarily improve economic competitiveness, because you might not have an educated, skilled, trained workforce with good infrastructure.
And I think that is one of the other challenges of the tables, is the context in which they are seen. And I think we've said before, if you're looking at a tax system, you have to look at how it integrates with the political, social, economic aspects of the country. So we offer evidence, I think, on this particular aspect, but no doubt you will apply your wider considerations and consider these wider factors.
Sorry, Mr. Cook, you wanted to comment on that?
Yeah, I just wanted to just pick up your point. I'm no expert on the relative tax rates around different European countries, but the investment decision that the likes of Hilton will make around different parts of Europe is based on an overall equilibrium, if you like, which they'll discover in each individual country. Tax rates may be higher or lower in one place, but that might be countered by any number of other factors which take them to an end result, which means that they're prepared to make an investment decision into that country. If you start changing one element of that overall equilibrium, then I think what you risk is affecting potentially adversely the investment decisions that these companies are making.
Sorry, James, back to you.
And thank you, Convener. Yes, I want to explore the issue of subsales relief that's been explored by the Convener, the Deputy Convener. And I may be paraphrasing you here, Mr. Cook, so you can correct me if I've picked you up wrong, but in response to the convener, I think you said something along the lines of no attempt was made in the Scottish Government Memorandum to say that economic activity underpinned by subsidy relief is legitimate. Is that, broadly speaking, what you were saying?
Yeah, what I was saying was that the policy memorandum, in explaining why subsidy relief has been excluded from the bill, all it says is that it underpins avoidance activity. That's the only justification that's given for excluding it. There's no attempt to suggest that the sort of economic activity that we've talked about and which benefits from subsidy relief is inappropriate. That was my point. And therefore my point is that there doesn't appear to be a policy. The Scottish Government doesn't appear to have had a policy imperative. And what we're saying is that, well, this policy, we think that there's some important things that need to be thought about here. And on the basis that it wasn't part of the policy decision-making process in the first place, surely it should be, these points should be taken into account.
No, sure. I mean, I think, probably, yes was the answer there. What I'd said was a fair synopsis of what you said there. I mean, I was going to ask what activity is underpinned by subsidy relief that you consider to be legitimate, but I think you've done that fairly reasonably in response to John Mason. But it begs the question, and you did say there are activities that are avoidance that I think you would say would be frowned upon by tax professionals. Can you tell us a little bit what they might constitute? What type of activity isn't so legitimate? What type of activity is just tax avoidance? Okay,
I suppose the starting point here is, without getting into too jurisprudential about it, what do we mean by tax avoidance? There's a whole spectrum there. On the one hand, there's the right of every taxpayer to order their affairs in a tax-efficient manner, which I don't think anybody would dispute as a matter of broad principle. At the other end of the spectrum, there's what you might call sort of egregious manipulation of the tax rules and technicalities within tax rules to exploit loopholes and avoid tax in a manner which many kind of reasonably minded people would think was an inappropriate use of the tax rules.
I don't know whether the tax professionals you're talking about are reasonably minded people, yes, but I presume that's what you were talking about when you said that would be frowned upon. So let's focus on that. So what is it, the activity that would be frowned upon? Yeah.
So SDLT has, and stamp duty before it, has had a bit of a tradition of people wanting to try and avoid it. The SDLT, when it was brought in, its raison d'etre really was to do everything possible to clamp down on the avoidance which was occurring under stamp duty. But because that inheritance is there, there have been continued efforts in certain quarters to find ways to avoid having to pay SDLT. There's been an equal effort on the part of the UK government to stop that activity. So there's been a game played over a number of years as the SDLT legislation has developed to close down the loopholes. Where in latter years, where we've seen the activity particularly, has been in certain elements of the residential property market, where subsale relief has been combined with other mechanisms within the legislation in what some would say is quite an aggressive way. I would say aggressive as tax professionals' code for it might not work, but you're prepared to give it a try. Some of this aggressive planning has been sold to people as a way to avoid having to pay stamp duty on the purchase of your house.
I mean, I'm not really getting a sense of what that might involve. Can you tell us, without naming names, I'm not asking you to whistleblow, but I mean, can you tell us the circumstances where something might be the type of initiative that is frowned upon, your words, frowned upon by a tax
I can give you an example then of one which has been clamped down in just in the last year or so. A loophole has been getting closed, where subsale relief was combined with the grant of an option to purchase the house from the person who ostensibly bought it. I don't want to get too sort of into the technicalities of it because it's I'll probably get stuck in the mud myself, and it's not something that I think you need to be terribly interested in the precise detail of it. But it's
that though, because I mean, surely if anything, we do have to get stuck down in the detail.
Well,
and
okay.
if you're saying to us that what the Scottish Government is proposing to say that there should be no form of subsidy relief is not correct, and there should be elements of it allowed, then I'm afraid to say is whether we like it or not, the detail
Okay.
will be important.
Okay, well, that's fine.
I might not understand it incidentally, but
that's
so long
fine.
as it's on the record.
So the example I'm giving is you own a house and I want to buy it from you. What we do is I find somebody who's prepared to cooperate with me to put together an overall scheme. And what happens is that the first person agrees to buy the house from you. So as far as you're concerned, you're selling the house to somebody, and that's fine. You're getting paid the price by the person, so it's all fine as far as you're concerned. But what the person who's contracted with you is doing is agreeing to grant an option to buy the land on certain terms, the house on certain terms, to a friendly party. The grant of the option under the rules before the loophole was closed down, under the rules arguably constituted a subsale. Because it was a subsale, that meant that the purchase of the property in the first place didn't attract SDLT. The grant of the option was granted in terms that no SDLT was being triggered by the grant of the option, and then at the point there were mechanisms within the option documentation which would allow the onward sale of the property if you were decided to sell it in a tax-free manner. Now that was aggressive in the sense that not everybody agreed that the grant of the option actually did bring it within the subsale rules, but there were those who were prepared to make the case for subsidy relief kicking in those circumstances, and on the back of that they were prepared to sell that as a proposition to people who wanted to try and avoid having to pay stamp duty on the SDLT on the purchase of their house.
And were people avoiding paying it in those circumstances?
Yeah, I believe so. I think it was probably more common in England, where, and particularly, of course, in the sort of higher value areas of England, where there's more at stake. Because if you engage in aggressive tax planning, then there's a risk involved in that. The risk is that it doesn't work, and that the tax authority investigates your affairs, decides that you should have paid the tax, charges you the tax, plus interest, plus potentially even penalties for having done what they think was the wrong thing in the first place. So there's a risk attached to it. So it has to be worth your while to engage it in the first place. And that's why I think that sort of thing would only apply to higher value property. I think these schemes were marketed, I think, primarily at property over £500,000, where the 4% SDLT
won't count then, incidentally.
Yeah, neither mine.
Okay, I mean, I think that is actually very helpful. Convener, is it okay to proceed with another couple of questions just in relation to, and this has been an area that probably demanded more of our attention than we might have expected, but both ICAS and Brodies refer to charities relief. Convener, I think it should be worthwhile exploring that a little further. In the submission from ICAS at point 14, you say charity tax relief should, in our view, remain available to charities whose charitable status is granted by HMRC and not just the Office of the Scottish Charity Regulator. That was suggested to us in our previous session as well, but when I explored that with the witness at the time, I suggested there might be difficulties with that. Clearly, we as a Parliament have no legislative competence over HMRC. The Scottish Government has no executive authority over HMRC. Do you not think there could be difficulties would arise whereby we're essentially using an organisation that we have no direction over in terms of the criteria for charities to fit into this legislation?
I think you might argue that. I think the practical reality is there's no expectation around Scotland or the rest of the UK that I'm aware of that there's likely to be any change in the HMRC's approach, or Charity Commission, or UK government approach to what is what is a charity. It has stayed pretty stable, that law, since 16-something, if my tax history serves me right. So I'm not sure that a worry about what HMRC might do is greatly at the forefront of, or any change that HMRC might come up with is given much practical concern elsewhere. Sorry, I was just going to go on to say there are, as far as I'm aware, very few bodies that have charitable status approved by HMRC who would not be able to register with Oscar. We gave one example in the paper there of Scottish Natural Heritage. And that's because there are very few differences in the legislative provisions when it comes down to in terms of most bodies. That's not to say there isn't an administrative role that HMRC approved charities wouldn't have to go through to register with Oscar, but that's different from those who couldn't register with Oscar because they do not meet the Oscar conditions.
We'll come to that in a minute, but I suppose the point I was making wasn't so much about the specific charitable test, because I mean essentially that is to a degree already different. We have a different standard. Don't ask me what it is, but
there are very few differences,
standard
yes,
in Scotland than we do in the rest of the UK. The issue I was supposing more was whereby we couldn't compel HMRC to say who they currently understand to be a charity. We couldn't compel them to provide. Now they may well say, well, here it is, but the point I'm making is we couldn't compel them. We have no jurisdiction over HMRC, so there's not a danger in. I'm
not sure that you would be seeking that. Would you not be seeking evidence from the body themselves as to their individual status? So I think your engagement was within the body concerned to maybe seeking a charitable exemption rather than needing anything from HMRC directly.
Yeah, that is actually very helpful. You then talked about, in answer there, about the issue of not being required to register with Oscar, and I want to explore that because in point 15 you say it's our understanding, ICAS's understanding, it would be incorrect to say that any English or overseas, i.e. non-Scottish charity can register with Oscar. Can you say why you think that's the case?
If they do not meet the charitable conditions as set out in the Scottish Charities legislation, they cannot register with Oscar as a Scottish charity because they do not meet the conditions.
But you've not said to register as a Scottish charity, you said they cannot register with Oscar.
My understanding is that they cannot go on the register with Oscar, which is the register of Scottish charities.
Oscar told us in the last session that these bodies could voluntarily register with them under, I think it was section 14 of the legislation you just referred to. I mean, is that news to you?
It would be, because my understanding was anybody could apply to register with Oscar, but there was a further hurdle that, in terms of their constitutional powers and purposes and aims, etc., they had, before they would be admitted to the register,
but this
they had to apply.
This is essentially a separate register. This is a register that's only voluntarily engaged in. These are charities. These charities could register with Oscar, as our understanding from Oscar themselves.
It's not my understanding position, but I wouldn't claim to be an expert on every aspect of Section 14.
Okay, I just want to turn lastly, convener, to the Brodies evidence in relation to charities relief. Mr Scott, in your evidence, you say we don't believe that LBTT charities relief should only be available to charities which are registered with Oscar. We believe LBTT charities relief should also be available to charities registered with the Charity Commission or recognised as charities with HMR Revenue Customs, and also to overseas charities operating in Scotland, whether or not they are required to register with Oscar. But there's clearly going to be an issue of, we want to make sure that anyone that's claiming to be a charity is a bona fide charity, they've got a genuine charitable purpose. So the question, I mean, it's not an illegitimate position to take, but the question I would posit to you is, how do we do that?
Well, I mean, it's much the point that's been touched on already. Our concern was there was a, by tying, and you could see it at a practical level why it was let's go to Oscar, because that's the body we know, and that they will have done the testing for us. But One is it would be for the charity itself to claim the exemption or the relief and to justify why it met the criteria. It just struck us that that's the better and more legitimate way of doing it than it is to have just a criteria that says you must be registered with X, Y or Z.
Well, I mean, to be fair, you've given two examples. You've given the HMRC and the Charity Commission, but what about those? And I freely accept we're talking about. I mean, you have any instances at all, but the situation, the circumstances could arise, so we better get it right at the start. If there are charities or organisations saying there are charities that aren't, that don't fulfil even that criteria, how do we check that? I mean, I understand you're saying they will have to prove it, but how do they prove it?
It's a fair concern. I don't think it's the biggest concern overall in the scope of the legislation. But no, I take your point.
Okay.
If I may offer, I understand that when similar issues have arisen at a UK level in the tax system, HMRC maintains almost a list of the bodies that may be the equivalents to Oscar in different parts of the world. Not every part of the world has the equivalent of charity, tax exemptions and reliefs and charities. They have different types of structures. It may be that that approach could be followed. But there's an exercise to be undertaken. It's administrative burden for any government then or tax authority then to do that.
Okay. Jean, to be followed by Gavin.
Thank you. I want to go back, I'm afraid, to the subsale relief and the tax avoidance and that whole area, because I think this bill has been generally welcomed by everybody who's come in to give evidence, and particularly from the point of view of being much clearer, simplifying and so on. And yet, when we come to the detail of it, there seems to be a kind of nervousness in each of the that we might change things too dramatically, or that business may be asked to pay too much, and that would be off-putting. That's been quite a large, taken a large amount of time today in your nervousness of the bill. So if we assume that the bill is welcome, it's a real opportunity, it's for clarification and simplification, and if we also accept that at the moment, and I think last week or the week before there was a quote from somebody in the House of Commons who said the SDLT could drive a coach and horses through it. And if we accept that means that there's been a huge loss of revenue to the government, then somewhere that has to balance up. And if people have to pay a bit more, closing the loopholes will be one thing, but you seem to be suggesting that closing some of the loopholes that we're proposing is a bridge too far. So, in other words, if everybody paid their tax, we maybe could all pay a little bit less. So closing the loopholes is important. Would it be better to state, first of all, that everybody should pay, and there may be exemptions, rather than trying to anticipate what all these areas should be and write them in the bill?
I think my observation would be that what we're trying to say is, yes, that this is a great opportunity to simplify, to clarify, to sort out the distinctions between English property law and Scots law, but that if the detail of the drafting as it proceeds can preserve the reliefs and exemptions in commercial circumstances where they support economic activity for a good policy reason, then that's fine. What shouldn't be encouraged or enabled are reliefs or a drafting of the legislation, or the legislation with the anti-avoidance provisions, a lot of which we haven't seen because they're still in the taxes management bill still to come, then we don't want to adopt that. So a lot of the anti-avoidance provisions have yet to be seen. because they're not sitting in this bill, they sit in the taxes management bill. But that doesn't by itself mean that protecting the likes of subsale relief, where we believe there may, in commercial development transactions, it may be important from an economic perspective that we shouldn't be able to proceed with that. And that isn't going to be at a revenue cost if the relief is already there.
No, I would just agree with that. That it's absolutely correct that the principles behind the bill and the aspirations of the bill are I think, supported fairly universally, and simplification is absolutely supported, which is why, for example, the intention is to simplify the partnership arrangements, which is one of the most complex bits of the SDLT legislation. And we're not talking about that today because we don't know what the legislation is going to look like for LBTT. But it's an example where simplifying legislation is absolutely supported, I think, across the board. But there's a distinction, I think, between simplifying the legislation and simply cutting bits out, which are felt by taxpayers to be important in terms of underpinning economic activity.
And just finally, the point about the business or discouraging business. I mean, nobody wants to do that. But is it not true that business will see, that any company will see an opportunity, a business opportunity, we talk about entrepreneurialism and so on. Is this tax, really a priority in terms of what would make a company develop a business or develop a piece of land or a property? It's not the first thing in their mind, is it? It
is something which is pretty high up in the mind of property, the property industry. It's quite a straightforward tax in the sense that, certainly as far as SDLT is concerned, it's pretty easy to see at a very simple level what percentage of the price that you're paying for land is going to be sort of creamed off in tax for the SDLT, 4% at the top level. When stamp duty was, just to give a comparison, when stamp duty was replaced with SDLT, it generated a vast amount of heat within the property industry and a vast amount of interest in the property industry. And I think that is indicative of the high profile that stamp taxes, including LPTT, have within the property industry. So I think anything which is seen to be a significant change to the LBTT, within the LBTT rules, will certainly be quite high profile within the minds of the property industry.
And what does...
It depends as well on the participant in the property industry we're talking about. I mean, if you're a person buying a house, it might not be the biggest determining factor whether you buy a house or not, what the LBTT rate is. And that won't necessarily have a bearing on where you choose to live or which particular property you will go after. But it's going back to that point that, and therefore, an investor who's buying a £50 million office block, it may not be the most important determining factor for them what the rate of LBTT is. The uncertainty about it absolutely can be, we think, can be a discouraging factor for now, whilst they do not know what the rates are going to be. But for other people, like I said, the developers that I've been touching on earlier this morning, for them, the cost of the LBTT relative to the development profit they will make by creating that investment is actually quite material. It's not 4% on the top of the gross. The 4% may well be half or a quarter of the entire profit they make from that project. That's surely going to be a material factor for them in determining whether or not they spend those 2 years pursuing that particular project or another one elsewhere.
And given that there was a bit of a stushy when the change from stamp duty to SDLT, the outcome of that, were many of the concerns realised? Did business stop? Was there a dramatic change in how people bought property or developed commercial ventures?
Life always goes on. Commercial activity always goes on, absolutely. When SDLT was coming in, just to pick one example which is relevant, it was initially not a feature of the stamp duty, the SDLT legislation, for subsale relief to be there. And there was such a level of concern about the whole thing that it was accepted that that subsale relief would be a feature of SDLT. So, you know, I think it's an example where, without suggesting that history repeats itself, although I'd rather hope that it does, but it's an example of where the level of concern, a level of concern is generated, and I think it's accepted by the tax authorities or the government of the day. It's accepted that there is that it's a genuine issue, and they clearly, in relevant cases, would accept the argument that that there would be an impact.
Thank you. But maybe just to conclude then, that clearly they listened, but they made so many exemptions that their own tax collection regime has been faulty for quite a long time, to the extent of millions, if not billions, quote unquote.
The SDLT legislation is not exactly the finest example of parliamentary drafting, and because of that, it's quite unclear, it's very technical, and tax legislation which is unclear and technical lends itself very easily to tax avoidance because there are so many potential loopholes that people can pick through it. And that's what's that was what happened with SDLT. Subsequently, a feature which has been introduced into SDLT and which is going to be a feature of LBTT is a kind of general anti-avoidance rule. SDLT initially had section 75A, which is not proposed to be a feature of LBTT. That's being sort of superseded by a general anti-avoidance rule, which is going to be a feature of LBTT by virtue of the Tax Management Act. And that has had probably the biggest impact of all in terms of closing down loopholes, because it's just such a sort of overarching blanket that stops avoidance.
Gavin, to be followed by Malcolm.
I want to ask a question about the tax rates and bands. As it stands, they're due to be published in September 2014, with the tax going live in April 2015. From the point of view of your organisations and those that you represent and speak for, when do you think the tax rates and bands should be published?
From my perspective and from our client base, so the sooner the better. I mean, you know, so if it's not possible to publish specific rates, guidance as to the intentions or where it might be an indication of what the top rate might be would be very welcome. Because as I said, it's about uncertainty, and it's about buying a property today and not knowing what the value will be once the rates are announced, because that will have effect on the value of it when you sell it on, and that discourages people's ability to invest in and make sane, rational decisions about investing in property.
I would echo that. It's my understanding that this bill is proposed to be enacted this summer. ICAS has always taken the view that it is for Parliament to enact what it intends should happen. So I must admit we have an intellectual problem with enacting a tax without the details of its structure being set out as the bill is enacted. I completely understand that there may be needs to flex rates depending on the perception of the revenue that would be raised, but there are key decisions of principle that would be in the Act. Even if you went with the follow-up timetable, as I understand it, that there will be the further consultation of the regulations, which I think is where the details of the rates are to be. They are even due to be concluded, I think, by summer 2014. And if that is the last time Parliament considers it, then that is the last time, you know, that should finalise matters. But leaving it another few months before anything is announced, I think would be a poor outcome. And I think more would be expected of the control and decision and the direction that this bill is to take from Parliament.
I would agree with that. Again, I would agree with that again. As I said before, by virtue of the way that the transitional arrangements work for the introduction of LBTT, contracts are being entered into now and deals are being negotiated now, which will be subject to LBTT because they'll be completing post-April 2015. But the people who are entering into those arrangements don't know what the tax will be, which they'll be paying on the transaction. Now, you might say that it's intended to be revenue neutral overall and that it'll be roughly in the same ballpark as what you would expect under SDLT. But as I said before, it may be that higher value transactions and commercial transactions in particular, the tax has to go up to compensate for a favouring of the residential market. Now that might end up to be the case to a greater or lesser extent, but the whole point is that we don't really know, and there's an uncertainty there, with investors therefore and developers therefore not knowing to what extent they might be expected to shoulder a greater tax burden. It gives that uncertainty. So I think any guidance that can be given just now, or indicators that can be given just now as to the sort of broad direction that balance is going to take, I think would be very helpful for people.
Thank you. We've had a lot on subsale relief, so I'll be very brief on it, but I do want to follow up on one point. You've all indicated that you favour subsale relief, and you've given examples of why you think it's important. I think you've all also accepted that as it currently stands at a UK level, at least over the last couple of years, it has been subject to avoidance that within the industry isn't seen as legitimate. How easy do you think it is then for the Scottish Government, when looking at their bill and considering whether to amend or how to amend, how easy is it to have something in that bill which allows a targeted subsale relief, which allows genuine transactions, if I phrase it as such, to happen, but preventing some of the more aggressive avoidance measures? How easy is it to have a clause in the bill which satisfies both the policy objectives?
I think the reason why under SDLT subsidy relief has been such a kind of rich pickings for the tax avoidance industry is because it doesn't work the same way as other reliefs. You don't really have to claim it; it just goes under the radar. It's a disregard of the first stage in the subsale process, so it just sort of disappears from the radar. Other reliefs have to be claimed by submitting a return form and ticking a box that says that you're claiming a particular relief, and you're therefore very firmly on the radar, and it's open to the tax authority to investigate to see whether you're really entitled to claim the relief that you claim to be entitled to. I think what I would envisage is that subsidy relief would be a similar type of process, where it's firmly on the radar, and of course you're combining that with the general anti-avoidance rules, which will be in the Tax Management Act, and the whole purpose of those rules will be to stop avoidance activity, whether it's through subsidy relief or through anything else.
I just wonder if other panellists have similar thoughts.
I would agree. I think it's perfectly within the capability of the draftsman to do a far better job than the combinations of things that are sitting at the moment. Other parts of the legislation elsewhere use, for example, targeted anti-avoidance provisions. They look at bona fide commercial reasons tests. You could look at the claiming and the compliance and management process that Revenue Scotland or Registrars of Scotland would take over claims being made, an effective compliance process and challenge process is something that has actually been missing from the practical operation of SDLT, which I might suggest might have been one of the reasons why there was so much proliferation of activity in that area. So there is about how the tax is actually managed by Revenue Scotland. I think it is perfectly possible to do. It'll take a little time, a little thought, but it's possible, very possible.
It was often the combination of subsidy relief rather than the subsidy relief itself, which was the problem. It was its combination with other reliefs which gave rise to many of the concerns that were raised. So I don't think there's a fundamental problem with it, including a subsidy relief, which will have the effect that we all want it to have and encourage the economic activity that we've all been talking about.
Several, thank you. Thanks.
Followed by Michael.
Just one final question on subsidy relief, or perhaps not, maybe Michael's got lots, but do you think the amendment that the UK government's introducing, would that be a good model to follow, or do you think there might be some flaws in what the approach that they're taking as well?
The UK government's proposal involves claiming subsidy relief in the way that I described, by claiming it as a relief just like any other relief, where it's, a return has to be submitted and it's on the radar. They've combined that with several pages of drafting of legislation to define in intricate detail all the possible circumstances that they can see as to where it might be used, not used, abused, etc. And what I would suggest is, in the interests of trying a simplified approach, I think what they're missing in taking that approach is the impact which a general anti-avoidance rule has on attempts to manipulate the rules inappropriately.
Thanks for that. Now, just leads me on to the comment that you made a minute ago that the SDLT was not the finest example of parliamentary drafting, but you suggest this is still Pinsent Masons. You suggest that there, to some extent, our bill is copying some of the problems. I think you give an example which I won't even attempt to describe about the relationship between paragraph 10.5 and paragraph 37, but you make the more general comment that that and several other points of the bill will require to be clarified by guidance. So that's one concern. In the interest of time, if I could combine that with another concern that two submissions make, that some things that are not in the bill because they're going to be in regulations are a matter for concern, and particular reference is made to section 67, which I think is to do with our favourite topic of exemptions. So I just wondered to what extent you think, well, I mean, is the guidance issue, is that going to affect, are there large parts of the bill that really need to be sorted in terms of primary legislation rather than guidance? And in fact, is it only section 67 that needs to be looked at from the point of view of requiring primary legislation rather than regulations, or is that a general problem as well, that too much of the detail is being left to regulations?
Section 67, which allows subordinated legislation to come in order to, for example, to adjust the reliefs or the like, that's subject to parliamentary process. I wouldn't comment on whether negative, affirmative, etc. process is appropriate or not for individual cases, other than to say that it is a common feature of tax legislation that that sort of facility is given within the tax legislation in order to make fine adjustments without having to wait for primary legislation. I think I suppose you would take the view that the checks and balances in the parliamentary process and the need for affirmative or negative processes are there to make sure that that's not abused. The problem with the SDLT legislation and the problem with kind of copying over large parts of it into LBTT is that we've spent the last 9 years or so since SDLT came in trying to work out how it should work in practice. And it's really not, to be honest, it's really not possible for somebody to look at the SDLT legislation cold and understand how it ought to work. The only way to understand it is to understand the background to the sticking plasters which in any one particular provision applies, and to know the guidance which the Revenue have issued on hundreds of instances of it as to how the legislation needs to be interpreted to allow to make a particular scenario work, because there are so many inconsistencies or uncertainties in the legislation. Where LBTT copies over the SDLT legislation, we're going back to sort of year zero, if you like. We don't have the benefit of the years of guidance that the Revenue have built up, and which is hidden away within manuals or guidance notes on the Revenue's website and the like, we'd have to feel our way through the whole thing again with Revenue Scotland. And in an ideal world, what we would be doing is taking the time to make sure that the LBTT legislation actually dealt properly with those points. I suspect that the reality is that we don't have the luxury of the time, unfortunately, to achieve that.
ICAS are more worried about the secondary legislation point.
Yes, as I read through it, and perhaps I'm worrying or not, but the powers being taken in the bill are over the structures of the tax in terms of rates and bands, and I completely accept that an adjustment to say it will be 3.5 or 3.6 or 3.7 would be within your normal budgetary process that you might expect. But it also extended to all the reliefs and all the exemptions. We spent a considerable amount of time this morning discussing reliefs and exemptions. Should we have them and shouldn't we have them? And to be able to make changes by regulations over what has been perhaps the biggest area of discussion does seem slightly generous.
Okay, that's useful. Think of the counter arguments, but that's useful. Now, you're also concerned about the number of definitions which refer to UK legislation, and you give an example of the definition of corporation tax. I mean, is that do you think there's lots of examples like that you would be concerned about?
There were a few examples as I read through the draft legislation. It's getting more to the principle. If we've heard the principle of this is Scottish legislation by the Scottish Parliament, I wondered why you would hang a definition that you don't control, have a definition that you don't control. The Corporation Tax Act 2010 isn't controlled by the Scottish Parliament. So if there were to be a change in that definition enacted by the UK Parliament, it would then feed through, it would change the impact of your LBTT legislation without Scottish Parliament doing anything. And whereas it would seem to me perfectly acceptable for some of these definitions which aren't controversial simply to be copied in their current form through, it would then make it part of your bill that you controlled rather than dependent on something you didn't.
I think it would be useful. I'm sure you'll put stuff in for stage 2, but I think a lot of the points in the submission would be useful if you put forward suggested amendments for stage 2, and that's certainly true of the Pinsent Mason submission. Because you've got a lot of detail there, which is really appropriate for stage 2. But one general point that has come up, and we've got the keeper from Registers of Scotland coming next week, relates to Registers of Scotland and Pinsent Mason. I mean, in a kind of way, you seem to be favouring the current system. I suppose, I don't know, it might be unfair to say that many of your comments today, you're really urging us not to necessarily change the existing SDLT provisions, and you refer to the land transaction return that is now currently submitted to Registers of Scotland, and you're worried about the new arrangement where payment goes at the same time as registration. And you make the point, which nobody else has made, that in practice people have only got 14 days rather than 30 days, which is an interesting point. But then you go on to say that the Land Registration Act 2012 will perhaps solve all these problems. So I suppose my simple question is, do we actually just have to make sure that we follow your proposal about implementation of that act? I mean, does that cancel out all your other concerns, that 35-day priority period, or would your concerns still stand even after the Land Registration Act comes into force?
It would certainly be very helpful. The detail is in the written submission about the nature of the point there. There has been a kind of general pushback, it's probably fair to say, from the property industry as to the notion that you can't register your title until not only have you submitted your return, but you've also paid the tax. Whereas at the moment, you have to submit the return, but you don't have to pay the tax. I guess SDLT justifies its position on the basis that by submitting the return, you have submitted yourself to the tax system, and even in the I would say unlikely event that you don't follow up very quickly with payment of the tax, you're in the system, and it's very easy for the tax authority to enforce payment against you because they know that you should have paid it, and it's quite straightforward. I seems to me for the revenues computer systems to link the two up using the codes which are adopted for individual returns. I don't think it involves a manual process, which I think I saw somewhere in the policy evidence that's something that Revenue Scotland might be concerned about. So it doesn't seem to me that there's a particular compliance issue in terms of tax collection under the current system.
Okay, look, I won't go into licensing and charities except to ask just two brief questions. I mean, Nick Scott, you gave the example in licensing of a gig for a night. This rather surprised me. Are you suggesting that this would somehow be caught by?
I think that was our reading of the legislation. There was a concern that removing the exemption of licences from LBTT would sweep all sorts of things in by accident, which weren't necessarily intended and would be caught by LBTT, which have not to date been covered by SDLT. So I raise it more as an example of, is that really what was intended by the thing? There are much, again, more meaningful and more legitimate ones to be concerning ourselves with, but we need to be clear as to what the intention is.
Thanks. And finally, just on the charities, which I won't go into in great detail, but I was intrigued by the reference to Scottish national heritage in the ICAS submission, so I didn't quite understand that reference.
Scottish natural heritage has charitable status granted by HMRC, but it does not meet the conditions of the Charities Act in Scotland to be recognised as a charity in Scotland by OSCAR. Therefore, whereas, or the consequence of that is, if the LBTT bill only acquires to properties that are approved by OSCAR as Scottish charities, it is one of these whose situation would change. A transaction under SDLT, if it were to acquire land, it would be within the charitable exemption. Once it's under LBTT, it would not be.
I find that really interesting, because I didn't realise that was the case, because it opens up the whole question of other lots of bodies like that that are registered with HMRC that aren't. I don't know whether they've tried to register with OSCAR or what the grounds that they can't register with OSCAR.
My understanding is there is a particular provision, and I think it's one in OSCAR, which has something to do with ministerial control. And my understanding is that is likely to be the test that is. I didn't think Scottish National Heritage. I'm not aware that there's a huge number, which then takes you to the consequence of, well, you're not causing a big problem if you don't include them. But likewise, it's sometimes useful to think of examples to see, well, if it's not a huge number, why don't we just include them? But that is the policy decision.
Okay, that's interesting. Thank you.
Okay. Michael.
Thanks, Convener. I'm going to start by apologising for not being in my place when you kicked off the meeting this morning. This question, I sort of waited to the end because I was hoping that someone else would ask this question, because it might open up a can of worms that we hadn't sort of got into before, but I hope that's not the case. And I'm not referring to the sort of carry-on film references to bear trustees, but the Pinsent Mason paper does raised this issue, and no one else had done it that I've seen any of the evidence. No one else has gone into that area. I'm not sure how significant it is, and it's not. That's the essence of my question. Is you've identified an inconsistency between Schedule 18, Part 3, Paragraph 5, which says that when a person acquires an interest as a bear trustee, the interest will be treated as vested in the person for whom the bear trustee is the trustee. But then later on, there's a contradiction because it says that's not the case. So is that just an inconsistency in drafting, or is it a significant problem?
I guess it was initially being pointed out as an inconsistency between the policy memorandum and the bill. What I wasn't sure about is whether that was simply because the SDLT wording had been sort of cut and pasted into the bill as something that was going to be revisited along with, for example, the partnership rules. And as part, I think the trust rules are, I forget if the trust rules are being looked at as well at the moment. So I wasn't sure whether that was just something that was actually going to be sort of picked up as we go through the parliamentary process.
Well, basically, the question is we need to get clarification on that, convener. I think because it's something that hasn't been raised before, and I just thought it would be interesting to see if there was an issue that we needed to get addressed.
Okay, thanks very much. Anything else? Okay, well, thank you very much for your evidence this morning. That's very much appreciated, as was, in fact, your detailed submissions. Given the fact that we've been going for about 100 minutes, I'll now call a natural break to allow witnesses to change and to give colleagues a chance to clear their minds for the next session. So we'll come back at 11:16. Folks, we're all here, so the committee will now continue its oral evidence session on the bill. Can I therefore welcome to the meeting Elaine Waterson of the Energy Saving Trust and Chaz Booth of the Existing Homes Alliance. And as with the previous session, we're not going to have an opening statement, we're just going straight into questions. And I suppose I may as well kick off, as I usually do in terms of these sessions. I'm not going to ask a lot because other colleagues, the submissions are... of course, I've got on a bit quicker if the Deputy Convener didn't heckle me, but the ground we're covering is obviously not quite as extensive as in the previous session. But just to ask you, I'll ask Chaz a question first, but Elaine can answer also subsequently. And it's all about, in your paper actually, Chaz, you say that it makes much sense to introduce a relief at this stage within the principle of the bill to allow the proposed tax to start to shape investment decisions before the bill is enacted. And you go on to say that the most energy efficient homes become cheaper to buy as the transaction costs decline, therefore demand for energy efficient homes might increase and thus incentivise sellers to invest to improve ratings. However, we've taken quite a lot of evidence, as you may be aware, from organisations like Homes for Scotland, Scottish Building Federation and the Bill team itself, who all completely refute the energy efficiency. I think some of us were quite surprised with the evidence, but that it has any impact whatsoever on the decisions of people to buy homes. I mean, they might look at, obviously, the cost of the house, you know, the stamp duty and a number of other factors. But and in terms of the zero carbon homes, because I personally asked about that at the Bill team about the zero carbon homes, they said there's only been 5 applications and 3 awarded in the whole UK since that legislation came in 2006. So the issue is, what you're proposing, would it actually have any impact at all? And where is this evidence that it would? Because the people who actually sell homes on a day-to-day basis tell us that it wouldn't.
Okay, thank you, Convener. And can I start by saying thank you very much for the opportunity to give evidence to you today. I just want to start by clarifying I'm giving evidence on behalf of the Existing Homes Alliance, which is an alliance of lots of different organisations. I work for the Association for the Conservation of Energy, or ACE for short. We are a trade association. Our members are companies with an interest in energy efficiency, major manufacturers and installers of energy-saving equipment. We're members of the Scottish Fuel Poverty Forum, the Existing Homes Alliance, obviously, which is the remit in which I'm giving evidence to you, and Stop Climate Chaos Scotland. I'm giving evidence on behalf of the Existing Homes Alliance. The Alliance is very clear that we support the principle of the introduction of an energy efficiency relief. We accept that there may be more discussion on the practicalities of how that is introduced. I'll try and make it clear if I ever deviate from speaking with from an Existing Homes Alliance perspective to an ACE perspective. I'll try and make that clear. To answer your question, I think it is absolutely clear that at the moment, when people come to buy and sell their homes, energy efficiency is not a significant factor. I think part of the reason for introducing a relief is to try and make it a more significant factor. Now, we've got the context of energy performance certificates, which were introduced in 2009, so they are required at the point of sale. The intention of those was to raise awareness of the energy efficiency of homes. There is very little evidence that they've been effective in the UK. There's some evidence that across the EU they have been more effective, but there's very little evidence that in the UK they have been effective. So what we're suggesting is that an energy efficiency relief on a transaction tax won't be a silver bullet, but will significantly improve the chances that people will take the energy efficiency of properties seriously. In terms of research, I'd perhaps suggest handing over to Elaine, because I know that the Energy Saving Trust has done quite a bit of research on this.
Yeah, I think you're absolutely right. We know from the research that we've done that people say that energy efficiency and fuel bills are really important to them when they're making decisions about purchasing a property, but when it actually comes down to it, it's not. You know, other things are much more important: location, the size of the garden, number of bedrooms. So energy efficiency, when they do actually purchase a property, makes really very, very little difference. But I think that's one of the key barriers, is that people, in terms of taking up energy efficiency, if people want to install energy efficiency measures, they feel that there's a risk that the investment they make won't be recouped in fuel bill savings over the period in which they're living in the property, which actually stops them from investing in energy efficiency and taking up energy efficiency measures. So I think that if you do introduce other incentives that would encourage them to invest, then I think that's really important, and I think that's where offering reliefs could make a big difference.
I'm interested in pursuing the detail of this because although you both said, there should be reliefs, I mean, in your own report, Elaine, you say LBT bill should include provision to allow introduction of specific reliefs, and you just mentioned it there, but, how would this be implemented? How much would it actually be? I mean, would it be, what form would it take? And how would we fund it? Because as we raised with the previous witnesses, who were talking about reliefs and exemptions, the Scottish Government is looking for this bill to be revenue neutral, so we're not having to either cut services because the tax take is lower, impose taxes elsewhere to make up the shortfall. So if we're actually going to be bringing in reliefs, what would be the impact financially on this? And how would it be, if you like, recouped from elsewhere by increasing the rates, which previous witnesses said would disincentivise people from investing in property in Scotland. So I'm just looking for more detail of how this would actually work in practice.
Yeah. As I said, we accept that there needs to be perhaps more discussion about how this could work. The existing Homes Alliance has put forward a specific proposal, which is that the rebate would be based on the Energy Performance Certificate band. So, for example, an A or a B rated property might receive a 50% reduction in the levy or the tax that would be due, and then that would reduce to, for example, a 30% for a C band and 20% for a D band, and then you would get no reduction at all for the least energy efficient properties. We've done some research that estimates that the impact of that could be between 80 million and 170 million if it was introduced purely as a relief. Another alternative approach would be to introduce a relief on the most energy efficient properties, but a levy on the least energy efficient properties, such that the overall impact was revenue neutral. So, for example, you could provide a very significant rebate on A-rated properties and a small levy on G-rated properties, and vary the banding in between to ensure that those who sold the least energy efficient properties paid a little bit more, and those who had the most energy efficient properties paid less, and that would have the impact of being revenue neutral.
Say an MSP decides to buy a house in Edinburgh, they might decide to buy a new house because they might have a good salary and all the rest of it, it's likely to be an energy efficient home. I mean, if somebody is on a low income and they're maybe just a young person starting out and they're looking, I mean, my assistant bought a house that was built in 1898, just a couple of weeks ago. I mean, surely this would have an adverse impact on people at the lower income end of the scale, I would have thought, rather than people who've got money to actually pay for this. And so it would actually be a regressive tax in some ways in terms of people's incomes.
Well, if it was introduced in isolation, then I agree with you, it would have that effect. However, we have the benefit in Scotland of the Scottish Government's excellent energy assistance programme, which provides grants to those in fuel poverty. We will be very soon introducing the National Retrofit Strategy. The Scottish Government will introduce the National Retrofit Strategy, which has the impact of providing grants to improve energy efficiency measures. We also have the UK Government's Green Deal finance, which has the effect that people can install energy saving measures into their home at no upfront cost. So I think in the context of all of these, and the Scottish Government's boiler scrappage scheme, for example, and the many other initiatives to promote energy efficiency, I think that the overall impact would not be regressive at all, that actually it would be quite progressive. Part of the crucial gap at the moment in terms of promotion of energy efficiency is that there is very little incentive on homeowners or building owners to invest in energy saving, because in most cases they won't get their investment back. My own example is I live with my wife and 2 young children in a 2-bedroom Edinburgh colony flat built in 1863. over the last few years, we've invested around £20,000 in improving the energy efficiency of that property through draft proofing, solid wall insulation, solar panel, upgraded boiler, and so on. If we come to sell in the near future, we won't make that back. There will be no energy efficiency benefit to all of the things that we've done. We did it partly to improve the comfort in the home, because it was quite cold at night especially, and we did it partly from my own perspective to see what are the practical difficulties and challenges that an individual going through this process has. Most ordinary people would not do that, and introducing a relief, a land value relief, as part of the package of the Scottish Government's other measures to improve energy efficiency, we think would have a very significant impact.
I think the only other thing, I agree with what Chaz has said. I think the only other thing I'd add is that the Scottish Government have indicated that they're looking very seriously at the introduction of regulation for energy efficiency, possibly from 2018. And I think if they are looking at regulation, then I think that getting people used to making or upgrading their homes energy efficiency at the point of sale is kind of a really important kind of precursor to introducing that regulation in the future.
There's an issue about whether the cost of actually bringing it up to these kind of standards is higher than anything that people would make on a relief, though, is there not? So if
Yes, I think that's true. I mean, any relief is going to be an incentive. It's not necessarily going to offset the entire cost of the measure. The Green Deal finance and the National Retrofit Strategy are there to do that. So if you're in fuel poverty and if you're eligible for various reliefs, you will get lots of measures for free under the Scottish Government's National Retrofit Strategy. And likewise, if you're not eligible for all of those, then you can get Green Deal finance, which will ensure that you can install those energy efficiency measures at no upfront cost. The upfront cost of energy efficiency measures has been a very significant barrier in the past, and that's part of the problem that the Green Deal seeks to address. We think the benefit of an energy efficiency relief on land and buildings transaction tax would be an added incentive to encourage people to do this.
Thank you. I don't want to hog the session, so I'm going to go right out to colleagues. The first one to speak will be Jamie, to be followed by Malcolm.
Thank you, Convener. You might not want to hog the session, but you've actually asked some of the questions I want to ask already, Convener. Although it does, the answer given does allow for a bit further exploration. It's in relation to the proposition from the Existing Homes Alliance in terms of the specific suggestion of percentage relief applied according to the energy rating band of any property that's being sold. I mean, I think the first observation would be it's very useful to have quite a specific proposal, and indeed for it to have been costed, because that doesn't always happen. But it does strike me that the percentage reduction proposed for each band does seem quite high. 50% for those rated A, B, 30% for C, 20% D, if I picked you up correctly. I suppose the first question is, is it the position of the Existing Homes Alliance that for this to be effective, they need to be that high?
I think I would go back to what I previously said. We accept that there may be some discussion about the detail of this. This was our initial proposal. In a sense, we're happy to discuss with Scottish Government officials about whether this is the appropriate level. Obviously, the greater the rebate that you give, or the greater the relief you give, the more impact it will have. We note, for example, that the zero carbon relief was set at 100%, and that is proposed to be removed from the land and buildings transaction tax. We think it would be a major missed opportunity if an alternative is not put in place, which greatly incentivises improvements in energy efficiency. So if you're removing 100% rebate, albeit I accept that there are not a large number of properties that have benefited from that, perhaps an alternative approach would be to say, okay, the zero carbon homes rebate has not been particularly effective. Rather than ditching it altogether, let's see if we can come up with a more effective strategy. The advantage of what we're proposing is that it will tackle existing homes, and that is by far the biggest problem when it comes to both fuel poverty and climate change emissions. The zero carbon relief was entirely new homes, and therefore was a small number in absolute terms, and also had a small impact in terms of fuel poverty and climate change.
Yeah, I mean, that tallies with evidence we were given. Because I suppose the advantage of your scheme is that every home for sale has to be rated. Now, I mean, you've told us the likely impact on revenue accrued to the government through the tax system, but has there been any assessment of the likely impact in terms of activity in the market?
In terms of people actually wanting to take up the offer?
In terms of would this actually be an incentive for people to come along and buy and sell homes?
The only research that I'm aware of is work that we did probably about 8 years ago, so it's quite dated now. Where we spoke with householders about possible reliefs linked to it was UK work at the time, so it was linked to stamp duty, land tax, and the people we spoke to were fairly enthusiastic about it, and said, I think that the percentage was something like 26% of householders with cavity walls that weren't filled said that they would take up an incentive linked to stamp duty, land tax. But again, that's quite old research, and it was based on specific rebate levels that we had spoken to them about. They were, I can, but just to caveat that, we were looking at it very much in terms of encouraging people to install cavity wall insulation and loft insulation, and I think now we're probably looking much more in terms of solid wall insulation, which is a much more expensive and disruptive measure to have installed, and we were looking at something in the region of £300 to encourage loft, and I think something like £500 for cavity wall insulation. But that already included discounts that people would already get from their energy suppliers in order to install those measures.
Okay. There's also, just very briefly, there's also the evidence from the Scottish Government's consultation, which found that 2/3 of respondents did want to see an energy efficiency rebate. So that suggests that there is consumer demand for it.
Yeah, I mean, I suppose that I'm not necessarily seeing this as my perspective, and I was surprised with what we were told about the cynic in me. Says that it's easy for people to say this, but when push comes to shove, how much of a priority is this? But I mean, I suppose you've accepted that yourself, and you're saying, how do we make it a priority? Can I
just add to that? I think as well as if people know that regulation is coming, they might see this as a really good opportunity to get something done and get an incentive and support to get it done at that point, as opposed to having to wait till regulation kicks in, and then incentives. Such big incentives might not be available anymore.
Okay. Turning again to the paper you provided, or your organisation provided for us, Chaz, I just want to pick up on something in bullet point 11. There seems to be a slight contradiction here, and I think, to be fair, you've posited it as a contradiction, because you do say there are alternatives, but they are quite different from one another. You say that the introduction of the scheme of relief you propose could mean that the most energy efficient homes become cheaper to buy as transaction costs decline. And in the last sentence say, alternatively, sellers might increase the asking price, and the knowledge that savings in transaction costs would be realised by the buyer. They seem to contradict one another a little. I suppose you're hedging your bets a little, but which is more likely, do you think? And I think the more important question might be, which is more desirable?
I think it is important that there is an energy efficiency premium developed for housing, that energy efficiency rises up the list of factors that people take into account when they buy properties. Now, these are two possible ways that, I mean, obviously, overall, if you're providing a tax relief, then overall that property becomes cheaper than it would otherwise have been. It is possible that the seller will then want to reclaim some of that, especially if they have invested significantly in the energy efficiency of that property. I don't see that as a problem as long as the energy efficiency factor rises up that list of factors that people take into account. So if a seller is more likely to invest in energy efficiency because they think they can get a marginally increased sale price, then that is a good thing. It's an incentive on the seller to invest in energy efficiency.
Does it not wipe out, in some sense, the incentive for the buyer through the reduction in stamp duty, or LBTT as it will be?
Well, the buyer would, of course, have a number of incentives for purchasing that property, not least because it will have much lower fuel bills. And
although that goes back to the point that we've kind of all accepted that right now that doesn't seem to be a priority. I mean, certainly from my own perspective, when I bought my home, I didn't consider it. I've got to be honest with you, and the evidence we've been given is people aren't considering that.
yeah, indeed. But as fuel bills, I mean, anybody who pretends to predict where fuel bills are going to go is, onto a loser. But there's no doubt that they will be volatile in the future, and in order to protect themselves from that fuel price volatility, a sensible homeowner will become more and more aware of the energy efficiency of their properties. So while you may not have looked at the energy performance certificate when you moved in, I would hazard a guess that when you get your next fuel bill that is significantly higher than you expected it to be, then you will start to look at those things. And increasingly people who are buying properties will be increasingly aware of those things, both as fuel bills increase, but also with the introduction of this relief, that could be a very significant factor in people's calculations as well.
Thank you. To be followed by Gavin.
I mean, I should say in general, I'm sympathetic to this idea just because I realise what a massive problem existing homes are in terms of our climate change objectives. So in principle, I think this is certainly worth taking seriously. But I mean, I suppose we would have to accept it would have revenue consequences, so if we were going to do it, we'd have to be absolutely sure it was targeted on the right action. So I suppose that's what I'm interested in exploring. I mean, Chaz, I don't really object to you getting a premium when you sell your house, given all the work you've done on it. So if the change was made to help you, that would be good. But then I might have a problem if the person who bought it from you then also got a premium, because that person would have taken no action. So I suppose that leads me to think, should actually, if there was to be action, should it not really be focused on action being taken, recent action or prospective action, which I think was the case with the research that the Energy Saving Trust did, rather than something that may have happened, someone may just have a house that was done 20 years ago even, why should they get some premium on it? So should it crudely be done on the banding, or should it be more focused on action taken to deal with the problem?
I see where you're coming from. I don't have an immediate answer to that. I could consider that and discuss it with colleagues and come back to you with a response. I mean, there is obviously the issue that if an energy efficiency improvement is done through Green Deal, for example, then the finance cost of that stays with the property. So in a sense, I'm unusual in that we used our own money and an Energy Saving Scotland home loan, which was available at the time but is no longer available, to pay for it. That home loan leaves the property with us, whereas Green Deal finance stays with the property. So therefore, when we come to sell, if there's a relief, we may get some benefit from that. But if it were a Green Deal property, then the buyer would take on the liability for that Green Deal finance as well. So I think there is a reason why the property itself should benefit from the relief rather than the seller who introduced the energy efficiency improvements, in particular if they're done through the Green Deal.
In terms of the Energy Saving Trust research, I mean, I think you were really focusing on the buyer doing some work in the I mean, is that still an idea that's attractive to you, or would you?
I think in principle it is, yes, because I suppose you don't want to pay people who haven't done the work. You want to use the tax system to encourage people to actually do something. I think that makes sense. But I think since we did our original work, I think the wider policy environment has changed. And I think, as Chaz says, now we have Green Deal and that will stay with the property. So the new people moving in will have to carry on making the repayments of that loan through their fuel bills. And I think that does change the situation slightly. So I think that's something that needs a bit more thought. And I think one other issue is that it has been suggested by some people that in terms of property purchase, the fact that a property has got a Green Deal loan attached to it could act as a barrier in terms of someone wanting to take on a property with a loan attached to it. So actually having some kind of relief linked to the land and buildings transaction tax could help get over that as well. But yeah, I think that the policy environment has changed since we did our original research. So in an ideal world, yes, we'd be encouraging people to take action, and we would only be giving reliefs to people who actually had taken action. But in reality, I think we need to kind of think about that a wee bit more in the context of Green Deal and loans staying with properties.
In terms of your original research and proposal, I mean, the question that arises with that is, how would I mean, I'm not sure in detail whether it worked, what you were proposing then worked in terms of you got a rebate after you'd done the work, or whether in fact you said you were going to do the work and you didn't have to pay all the tax in the first place. I'm not sure which it was, but either way it leads to the question, how would that proposal be different from just giving someone a grant to do the work?
I think what we found when we spoke to householders was that they felt differently about tax than they did about grants. People tended to either they got quite excited about talking about tax and quite liked the idea of avoiding it, and so felt that they would be more keen to do something if it meant they could avoid paying tax than just having a grant. So
was that the original proposal, that you would say I'm going to do this work and therefore I'm not going to pay all the stamp duty? Was that basically what you were saying? Or?
It was that yes, the buyer would undertake the work and then they would get a stamp duty rebate at some point in the future when they'd proved that work had been undertaken.
Okay, thank you.
Gavin, to be followed by Jean.
Thank you. I just wanted to double check the figures from the existing Home Alliance Scotland. I didn't see them in the paper, but I think you gave them verbally. What did you think the cost of the relief that you're proposing would be? I think you gave a range of figures. Can you just remind me what that range was?
Sure. Apologies, those figures were not in our evidence to the committee. They were in our response to the Scottish Government's consultation. So we looked at one proposal, which was, that very specific, a 50% rebate on the basis of A and B, reducing down to 20% for D. We estimated that the impact of that would be between 80 million and 170 million. Now, I didn't do this research, so I'll have to check with colleagues as to whether that's an annual figure or a one-off figure, but I can check on that and get back to you.
That'd be helpful. I mean, I suppose that's what I thought you'd said in terms of figures. My reason, I suppose, for asking was, according to the Financial Memorandum, the most recent set of figures, which is 2010-11, said that for residential, total receipts for Scotland were 165 million. So even if it's at the lower end and it's 80 million, that proposal would effectively chop in half what was collected. So I just wonder if you could revert to us, is that an overall figure over a longer period of time, or is that an annual one? That would be quite helpful.
I'll check and get back to you. I would stress, however, that this is one proposal which we've put forward as the basis for conversation. Sure. It's not necessarily our recommendation. Okay. And another alternative approach would be to have a revenue neutral approach, which had a reduction for the most energy efficient properties and an increase for the most energy inefficient properties. And we recognise that perhaps that might be more attractive to the Scottish Government, in particular in relation to its desire to ensure that there's a reliable income from this tax.
Okay, thank you.
Okay, Jean, to be followed by John.
Thank you. I think just following on from Malcolm's questions and his observations about who benefits, I can't help feeling that there needs. Would you agree that if we start from the ambition that we have for houses, that a tax allowance actually is probably, I kind of feel, the least attractive way of making that happen? I mean, would you agree that? Yes, I agree that people don't want to pay tax. I mean, that's just a given, and people don't want to pay tax, but they have to. And I mean, when they're being sensible, they see that. But surely the grant system, or what we really need to do is try, particularly with new build, is to see the energy efficient devices, whether that's insulation or heating sources, done at the time of building, rather than, because at the moment we're building houses that are actually going to be subject to retrofit because we're not doing it. So that doesn't seem to me to make any sense. So should the incentive, if there is money available, rather than making an allowance at the tax end, that it should be an incentive maybe to the developer even.
I think given that new build represents such a small chunk of the overall housing stock, I think that if we are looking at how the tax system could improve energy efficiency, I think it makes sense, just because the majority of carbon emissions are from existing homes. I think it makes sense to focus on existing homes. But that's not to say that a system couldn't be developed that encouraged improvements right across the board, from G-rated homes right through to A-rated new build homes or 0-rated new build homes. In terms of whether going through taxes is the right way as opposed to offering grants, I think that there are quite a lot of grants available already. We know, for example, from experience of the obligations on suppliers, so through the energy efficiency commitment and the carbon emissions reduction target, that it's become harder and harder and harder over the years to encourage people to take up energy efficiency measures. So the last part of CERT for the carbon emissions reduction target, for example, some of the suppliers were actually struggling to give insulation measures away for free. So I think there is a need to look at all policy mechanisms that can be employed to try and encourage people to take up these measures.
Yeah, and just to expand on Elaine's point, the energy companies were offering loft and cavity wall insulation for free over the last sort of 6 months to a year, and there were a number of people who didn't take that up. And now there might have been a number of reasons for that. They might have been unsure about what they were being offered. They may have thought the deal was too good to be true. They may have had concerns about the technical aspects of installing cavity wall insulation, despite the fact that those have been comprehensively addressed, and that cavity wall insulation is no longer considered to be a risk to the property, so long as it's properly surveyed beforehand. So there are lots of reasons why people are currently offered free insulation and they turn them down, whereas they might be offered a tax incentive and they take that up. We've seen the example of council tax discounts, where people are offered a small discount off their council tax bill on the basis that they will install loft and cavity wall insulation. Now, in most Scottish local authorities, that offer is actually more expensive than if you go out to the general market and say, I want to install loft and cavity wall insulation, and yet the take-up has been quite substantial, because there are certain group of people who are particularly attracted to seeing that line on their council tax bill, reduction due to energy efficiency measures, £50. So there is a very broad demographic out there. There are some people who will not accept free loft and cavity wall insulation, but they will accept a discount on their council tax in order to install it. What we are proposing, the energy efficiency rebate, will tackle that demographic that is not reached through other measures.
Well, the risk of going over the same ground a little bit more, this is the area that interests me, and I asked the previous panel and they couldn't really answer me, so I thought I'd ask you. If we were sitting here with a cheque for £20 million, offering it to yourselves to somehow improve the energy efficiency of homes in Scotland, would you put all of that or some of that into LBTT? Or would you put all of it or some of it into council tax relief? Or would you put all of it or some of it into grants? Because I still lean towards the idea that grants or something immediate is going to be more effective.
I think, as I said before, I think we kind of need a whole range of policies. There are grants available at the moment, and I think recent work by WWF Scotland suggests that we absolutely need increased investment in energy efficiency, and that should probably be increased grants for a wider national retrofit programme, for example. So absolutely more grants are required, but I think it's important to employ other policies as well if we are going to meet our climate change targets. Because just to say the climate change targets are massively challenging. They can be delivered most cost effectively through improving the energy efficiency of homes. Housing energy efficiency is the cheapest sector to deliver carbon savings in. But we need the right policies in place in order for that to happen.
Money. So, I mean, we're having to choose priorities. Well, not us personally, but the government is having to choose priorities. And I think my question is, OK, it would be nice to do relief on this and relief in council tax and this and that, the next thing, but where are we going to get most bang for our bucks? Are you totally convinced that this is one of the best places to put it?
I think I'm convinced that it is an important place to put it. And I think the thing to bear in mind is that we know that at the point of moving home is a point where people don't care about energy efficiency. It's just really, really low down on their priority list. And I think this could help get people who wouldn't be doing that work anyway to actually undertake that work. So it would kind of reach people that aren't being reached at the moment.
It would also miss out a lot of people, surely, because, I mean, I've lived in my flat for 23 years. I've no plans to move. Therefore, it is no incentive to me whatsoever.
Absolutely. I think
Yes.
I don't know what the figures are, and you probably have a better handle on those than I do, but it's a relatively small proportion of people that stay in their homes for more than 20 years. I think the majority will move before that.
We're talking quite a long term before, for some people at least, they would get any kind of feedback.
Absolutely.
And I mean,
but
the other thing is, I live in an estate with 270 flats, and none of them is £100,000. So this is of no incentive whatsoever if your house is under 180, isn't it?
I think that's why we need a range of policies. That's why we need the national retrofit programme. That's why we still need the obligations on suppliers to catch those people that wouldn't be caught through at the point of home sales.
Yeah. Your question is, where would you put your 200 million? Obviously, you wouldn't put all your eggs...
Is it 20, I suggest?
20 million? Oh, well, maybe I was being a bit more optimistic. Obviously, you wouldn't put all your eggs in one basket. You would spread that around to ensure that you had the maximum impact, developed incentives for the widest possible demographic, and as Elaine says, we have the context of some good Scottish Government programmes. We would like them to be better funded, but we recognise that it's better to have the energy assistance package and the natural retrofit strategy, which at least receives some taxpayer funding, whereas in England there's none whatsoever, which is deeply regressive and deeply regrettable. So we recognise that we have the context of the Scottish Government schemes, which are good, could be better, but it shouldn't be an either or. It shouldn't be, do we tackle fuel poverty through the energy assistance package, or do we offer a rebate on energy efficiency at the point of sale? Ideally, we should be doing both, because they're tackling different demographics. In terms of how much is this going to cost, I reiterate what I said previously. It could be revenue neutral if you introduce this on the basis of a rebate for the most energy efficient and a levy for the most energy inefficient properties.
I do take that point. Okay, I mean, I just wondered too the practicalities of it, because presumably, I mean, building standards are changing all the time, and hopefully, I mean, I was down at the Commonwealth Games recently, and, you know, fabulous houses which McTaggart and Mickle were building, tiny little radiator that's going to heat a huge room, but they say they cannot do that commercially at the moment, but that would be the standard in the future. So would we need to change the regulations every year to raise the standard, or more and more and more houses would get exemption?
Okay, I'm going to take my Existing Homes Alliance hat off for a minute and put my Association for the Conservation of Energy hat on. Obviously, the Existing Homes Alliance is concerned with existing homes. In terms of new build, which represents a small percentage of the market, but nonetheless, it's the easiest one to get right. The Scottish Government has a roadmap, the Sullivan Report, which was published in 2007, which set out a roadmap to deliver very low carbon homes in 2013, this year, and zero carbon homes in 2016. Now, if we stick to the roadmap, then we're fine. We don't need any zero carbon homes rebate. However, the consultation that the Scottish Government issued last month suggests that they are deviating from their roadmap, that they're watering down the level of ambition and proposing to delay the introduction of the 2013 and potentially the 2016 standards. That concerns us greatly, partly because it punches a big hole in the Scottish Government's carbon reduction targets, but also it signals a lack of ambition in a sense. It says we're quite happy for new buildings to be built at what in a European context are pretty poor standards. The energy standards that we have in Scotland were only recently brought up to the standards that Sweden set in 1978. We are around 30 years behind the best in Europe. We would urge that we need to raise our level of ambition there.
Okay. And can I just confirm, we're only talking about residential properties here, we're not talking about any relief for commercial properties? Right. Okay. Thank you.
Okay, thanks. I just want to take you back, actually. Chaz, you were saying this would be progressive, but looking at the figures, I have to disagree. At the moment, if we just looked at SDLT figures at the moment, someone who buys a house at £100,000 doesn't pay any stamp duty. So under your incentive scheme, your ABCD scheme, they would actually gain nothing. But someone who actually bought a house £200,000 would save 50% if they were A-rated, so that's £1,000 they would save. But someone who bought a house at £2 million would save £87,500, which is a bit of a big tax relief, given that the person who'd be saving £87,500, you know, isn't likely to burn much more carbon than someone who buys a house at £100,000. It's nothing. So clearly this, to me, looks very, very regressive. And although the figures for LBTT will not be the same as SDLT, however you design the system, the wealthiest people, the people who build the biggest houses, must be the ones who gain. Now, you talked about grants. You said it could be revenue neutral through A to G. But if you're going to have grants in addition to that, surely that would mean that it wouldn't be revenue neutral. There'd be a cost in the Scottish Government. And you're not guaranteeing that the people who are on the lowest incomes actually gain. So surely this whole scheme, to me, just looks like a subsidy for the better off.
Well, the Scottish Government grant scheme already exists. The Energy Assistance Programme already exists. The Scottish Government has committed, from memory, around 65 million in the current financial year towards the Energy Assistance Package. Going forward, that will become the National Retrofit Strategy, and again, there is money committed in the budget for that. So there is an existing scheme, and eligibility for that is very specifically related to what benefits you're on. So those who are the poorest will be eligible for 100% grants for a lot of this. So in a sense, I go back to my previous point that this, what we're proposing, is not an either or. It is in addition to the existing programmes. So in order to tackle fuel poverty, the Scottish Government has the Energy Assistance Package and will have the National Retrofit Programme, and we warmly welcome that and encourage them to continue that and to continue to invest in that. To address your point about whether or not this would be regressive, I come back to the point that I previously made. We completely agree that there needs to be discussion about at what level this relief would be set. Perhaps there is a cut-off point. You know, properties above a certain level would no longer benefit, for example. But I think there is a very real need to create an incentive for energy efficiency in the housing market, and that is not something that is currently done. The energy performance certificates don't seem to have achieved that, and we believe that a relief on the land and buildings transaction tax would be a sensible way to go forward, while recognising, of course, that we need to look very closely at the impact that would have in terms of those on modest incomes.
I think for homes that were valued at a level that didn't have to pay land and buildings transaction tax, so maybe looking at ways of giving them a rebate at that point anyway. So including them in the scheme, but just giving them a rebate even though they didn't actually pay any stamp duty. I mean, does that? Sorry, you're frowning.
Yeah, but that would cost the money. That's the issue. The issue is that if we're going to have a revenue neutral bill, if you're actually saying have a rebate, have a grant, you know, in addition to what's been done already, that clearly costs more, and that has to come from other areas of the Scottish budget, surely.
Yeah, it would cost more.
Okay, thanks.
Although, of course, there is also the Green Deal finance. So those people who have an income can apply for Green Deal finance, which allows them to install these measures at no upfront cost. So I think, you know, those who are in most need will be able to apply for the existing programmes, the Energy Assistance Programme and the National Retrofit Programme. Those who are not eligible for those will be able to apply for Green Deal finance, which will give it to them at no upfront cost. So I agree that we need to proceed with caution and we need to look very carefully at what the impacts of this will be. But I believe that in the context of all of the other existing programmes, that this can be done in a way which is progressive rather than regressive.
Well, thank you very much, and thanks to colleagues for their questions. At the start of the meeting, the committee agreed to take the next item in private, so I therefore now close the public part of the meeting and just have a 1 minute breather to allow the public and official report to leave.